$40 per barrel. What will it mean for the Russian economy?
We need to throw out Nabiullina.
I'd like to ask about Bitcoin as a reserve asset.
I think Bitcoin will never become a reserve asset. This is a completely useless idea, and Trump is just pumping on this topic. Reducing rates is not a stimulation. It's just an indicator that everything is very, very bad in the economy. We are just entering a crisis. Although we have been in it for a year and a half, we just stretch the time.
Hello everyone, this is Alt3 Capital. My name is Vlad, the Executive Fund Director. Today we have a guest, a person whom I sincerely admire, Alexander Kubоschkin. Sasha, hello, glad to see you.
Greetings, Vlad. Pleased to see you too.
For the viewers who don't know Sasha, Alexander is an investor, founder of the investment boutique Enfilade Capital and the author of the FinFak channel. Sasha, let's get down to business. I think Bitcoin will cost 100,000 in the next couple of weeks. Will you sell it?
Good question. I have already sold a certain amount. It seems to me that this mental score of 100,000 will put a lot of pressure on everyone, but I will leave some part anyway, regardless of the price. It's clearly defined how much cryptocurrency I hold in my portfolio, and Bitcoin is simply included in this mix. And depending on the price and how high it goes, I still sell basing on rebalancing.
I was surprised that since 2017, if not earlier, you are holding Bitcoin. You rarely sell, even holding for cycles. And you probably know this conspiracy theory that several thousand Bitcoins were lost and no one ever touched them and left them forgotten on their wallet. I hope this is not your wallet.
This is definitely not my wallet.
Tell me please, where are your latest limited orders? When will you attack the market with your sales and be ready to completely lock in profits? Or do you always use allocation?
Listen, well, after 2020, when the pandemic happened and the starting point was perfect, I went through the ups and downs, and now my strategy is based on dynamics and upside. Well, for me, I always assess the risk and upside rates in crypto. Volatility basically affects Bitcoin and altcoins. At the moment, my main asset is rather Solana. Bitcoin is like a nice to have. I look at Bitcoin more from the global perspective. It can sound strange to me, but it's a little bit more secure and almost equal to gold's worth. And in the case, if we compare these two assets, then I clearly have a preference for gold. But I definitely keep Bitcoin in the sense that it gives us certain dynamics with which we can get a very serious price movements, due to the fact that in relation to the overall portfolio, my allocation is not so huge in Bitcoin. In general, I say to everyone, guys, depending on your risk, you should have 5 to 10% of crypto in your portfolio for the balance. If you accept a higher risk, you can keep a higher allocation. For me, it's about 10% or so. My portfolio always contains it in this volume. And after this last one, when we left at 65, I just switched to Ethereum, and then I switched more to Solana. Therefore, the fact that it will fall from 100 to 50, or in a terrible scenario, it will most likely have little effect on me. We'll see. It means it will perform something else.
Well, it's very interesting. We will definitely discuss Solana and altcoins in detail. Tell me please, you said you've cut your holdings a little bit and secured it. When would you purchase more and increase the overall exposure? You said about 5 to 10%. When will you be able to do 7 to 15%? What would trigger you to take such actions?
Well, look, if we look at the seasonality of cryptocurrencies, then in principle, it seems to me that somewhere in December we should have a correction. Well, in general, after such a jump, a correction can be expected. The question is what will happen next? That is, we have people who say that there will be 140, 250. There are some especially gifted like Kate Wood, who declares absolutely crazy numbers. And there are others who say this is a huge scam. It will all go to zero. Here, everyone invests in what they believe, by and large. As for me, the biggest problem now is that we are in the period when, most likely, the next year, 2025, I think somewhere closer to spring, we will get a dynamics that will be extremely negative for all markets. If you take a look at crypto from the historical perspective, not taking into account how it is used, what it is used for as a speculative asset, it very clearly responds to liquidity in the system. It is clear that if we talk about liquidity now, no one can define it clearly, but everyone draws certain graphs. Historically, metrics that could describe liquidity always made an impact on cryptocurrencies, especially, including the technological sector. And accordingly, we are entering such a milestone when, on the one hand, our economic indicators continue to deteriorate. On the other hand, we understand that all the geopolitical instability that follows Trump's election and his program lead to the fact that most likely we have an increased risk that the markets will be in turbulence. Plus, if you look at the technology sector, all the indexes and shares are at the high rates, and we should expect a turnaround somewhere at the beginning of the year. I can imagine that now we are somewhere within 100. We will go back and forth, and at the end of the year, we can get a good correction there. Then we can consider it. But I don't think that I will go for Bitcoin. It will be more interesting in Ethereum, because technically Ethereum has just now a great setup, though these months it was lagging behind and everyone started to lose the nerve. Solana was already at 20 in October. Now look where the price is. Also, what kind of tricks Ripple is now playing in a couple of days. All this is very interesting on the one hand, but it seems to me that we have entered such a tough phase of speculation that it is time to knock it down a little. I would be a little careful here and not try to chase some super X. This is not about my investment approach. I do not pursue meme coins. I understand why people do it, but I don't do the same. And it seems to me that the period of March to April will be critical for me. Well, as you know, we talked to you that there is a little bit of liquidity in the systems. This is March and September as a rule. This year we went through it well last time. But here comes Trump, and I expect a rather serious internal political turmoil in US. And what the reaction will be there, it is difficult to say yet. Therefore, I expected somewhere before Trump's election that there would be a good rally, and I still was an extremely bullish regarding all indexes and risky assets. Basically, the picture is now emerging the fact that we have no problems with liquidity. We will most likely get a gradual influence of liquidity in the future. Basically, everything is quite good now for the crypto market. Let's see what will happen in January. January is such a nasty month. Figures can go up and down because all the budgets of the managers and players are set at zero. You need to know how to start something. And whether we go offshore or go to the logs market, it often depends on the emotional component. But I would say closer to March, basically the prospects are not bad there yet.
So, in short, as you said, short term, December, January is a period for correction. And within this correction, you will be ready to purchase as a middle-term goal. This is before March, April. In addition to what you said, apart from seasonality, there is also a factor of unlocks. So there will be large altcoin unlocks. That is, the supply of these coins to the market will roll out, respectively. The pressure on the market will be made by this coin's release. Here, according to the timings, we are on the same page with you. This is March, April, plus or minus. You expect a correction in December, January? If so, then let's draw the line.
Well, I'm just telling you that if you look at what we are now after Trump's election, the jump is 40 to 50% per month. Well, that's just too much. And now, again, this is all an extremely impulsive market. So if you are sitting in social networks, you are forced to see it every day. That's how much it all grows. And you constantly have triggers and you think, let me speculate a little now, this attracts additional capital. Plus, now everyone is happy because Trump, of course, has given a certain boost, since it is believed that the government will be very crypto-friendly, that they get rid of Hensler's Reptiloid, although who will go there? Today, Aitken refused to head the agency. Well, according to him, he is not going to clean up after the garbage and Hensler. And here you can understand that apparently there are certain things that the guys understand what needs to be done, but how it could actually be implemented. In my opinion, the political component will play a big role there. We just haven't seen it yet. If you see what is happening in geopolitics now, the situation in Syria, the turmoil happening in South Korea, we clearly see a serious internal political pressure. Inside the United States, if you look at the appointment of the Trump team, there's a big discussion about what he will do with the Democrats. He is a vindictive granddad, in fact. Plus, let's consider that Biden pardoned his son. And there the plot thickens, because if Trump will now implement consistently what he wants to implement, but let's say the first time he came, he did not really understand all these government pitfalls, and now he knows perfectly well who needs to be cracked down and who needs to be got in the neck. And accordingly, given that he has full authority as president, as Senate and Congress, then in principle, he can do a lot. The question is, even if we are talking about the cryptocurrency market, that I think from January to August, plus, let's say, the first 8 months, it will be necessary to expect the maximum activity of this administration, in the sense that in 2 years there will be interim elections again. And he needs now those economic programs that he planned. Basically, there are some figures from Peterson Institute for International Economics called PIIE. They calculated that the Trump program, as they will be implemented, the first year will be relatively plus minus. There will be a difference of 200 billion for the economy. And after 2028, the total negative consequences for the economy will be from 3 to 10%. That is what Trump is going to do. He is going to ruin the economy in his current program. It is clear that he is not a fool. It is clear that there are some long-term consequences. And I think that the cryptocurrency movement, let's say in the second quarter and until the end of the year, will be solely based on how the market will evaluate what it can really do and in what direction in the end it will choose from the point of view of the implementation of the policy. But now we live in that super crypto friendly hype, and finally they'll put a normal dude in SAC, and all this will turn out to be some kind of regulation, and the guys will be able to work well, because it has already turned into an entire circus.
Well, since we're in this dangerous geopolitical jam, let's savor here a little bit. First of all, I would like to note that Alexander published an article on the FinFak channel. I advise everyone to study it. In this article, you give a comprehensive view of the future of Trump's presidency. And just about the discounted promises, what you said, I want to highlight more. Well, first of all, in 2016, Trump promised to normalize relations with Russia. And it is interesting that none of the sanctions packages that were adopted in 2014 were lifted. Secondly, also, Biden once promised an infrastructure plan for the development of green energy, and all this before his presidency. Since its inauguration, ETF first grew by 20% and then corrected to 62% over the years of its management. Speaking of the current promises about Trump's current plans, what do you think, in general, what is the possibility of the agenda implementation? If we are talking about these 3 Trump arrows, about which you wrote, this is 3% of the real economic growth, reduction of GDP deficits to 3% and increasing oil production to 3 million barrels, and oil is obtained for $40. How do you think, in general, are all these 3 arrows feasible? In short, will they reach their goals? This is the first. And the second, what will be the consequences for the world economy and Bitcoin in the event of implementation?
The question is good, but I can't answer it because the plan itself sounds very logical. We need relatively low inflation. As a populist, he cannot accelerate inflation. On the other hand, for this, he is trying to reduce oil prices because the gas station for American prices is reflected a lot in logistics, in everything. On the other hand, everything that he is trying to do with tariff rates is in principle logical. It is inflationary because you make goods more expensive, which are imported to the country, and accordingly taking into account the entire dynamics of the labor market. In any case, the demand will fall and the inflation of goods will certainly prevail somewhere. He cannot allow it. Therefore, he says that in order to avoid inflation, first, they will drill more oil. And secondly, they will stimulate economic growth with help of deregulation and all sorts of things. This program was created by Scott Bessent. He has his own hedge fund. He is a very famous person, and I would listen to him because he actually understands what he is doing. Will it work or not? I think you need to look. It doesn't matter. We need to understand rather what they will do. Because if we are talking about lowering the price of oil to 40, then I can draw you a scenario where this will happen without increasing oil production. Now our price is somewhere around 60 to 70, right? And if we take this in the context of the entire geopolitical uncertainty, the fact that OPEC is voluntarily lowering the production rates, and even in spite of these reductions, even in spite of all geopolitical risks, we get a situation where the oil market is now in such imbalance that supply exceeds demand. The economic forces that we have now show that the economy is much rougher than we suppose. If we consider this whole discussion, the uncertainty factor, then I can easily imagine that oil will go to 40. Another problem is that if the oil price goes up to 40, we will face a huge number of problems of the second degree, which will not be solved politically, because it is clear that the company, due to which America can increase the volume of oil, is first of all shale oil. They say we will give out licenses to drill, but you will be able to do it only when it makes sense for you to do it. Accordingly, you should have some kind of economic incentive for this. As a rule, it is believed, well, there is a discussion about this, that for shale companies, the price at which they go to zero is somewhere around 60. That is, in principle, they are satisfied with the current price. Another problem we get is that the price is too low. This is a huge problem not only for Russia, but also it is a huge problem for Saudi Arabia, which has an invested budget of $90 to $100. So they are constantly losing money because of this. And you are constantly facing a conflict of interests of manufacturers from different parts of the world. Hence, in a normal situation, if the oil is floating in the 70 to 90 channel, it is more or less satisfactory for everyone. Everyone can live with it. If we see that the oil is sinking much lower, and this can occur against the background, if we look at China, what is happening there? China is dragging everyone more and more into this recession loop. Then the consequences will be quite difficult to calculate what will happen. And here, whether there is Trump or not, most likely the price will not be achieved due to additional drilling, but due to the fact that the economic processes are constantly slowing down. But the Americans, in fact, if you look at the statistics of shale oil, they most likely do not have volumes to increase the production by 3 million barrels. At least now it looks just fantastic. But the fact that they will do it, the fact that they are starting to remove the green band, this ETF, Biden went green, Trump says, damn this green. Accordingly, we have seen such a dynamic in the last couple of weeks, which is interesting. On the one hand, price reduction is extremely negative for energy company. On the other hand, they remain at the point, or in principle, if you look at the rates, their rates look pretty good. That is, they are quite stable. And this is due to the fact that, yes, you may have a negative dynamic from a price point of view, but at the same time, demand is growing due to moving against the green band. And so basically you can twist and turn any argument. But if we overlay one problem, the second part of the plan, the third part of the plan, that is the tariffs, you get a picture that I would not even be able to tell you right now if it was like this.
Look, Saudi Arabia is far away for us and Russia is closer. What do you think, hypothetically, if you model the situation, $40 per barrel, what will it mean for the Russian economy?
We need to throw out Nabiullina and everything will be fine. I'm telling you, as I hear from this whole discussion, that the deposits will be frozen, that the central bank is going to raise the rates further. Well, here I will even honestly say that I support the point of view of the patriots. We need to make a state bank. It is necessary to kick out the Ministry of Finance and the central bankers because there are just two different paradigms. If you live by the paradigm of what is, that is the global system, then their actions can be justified, but they are sharpened to the general global logic. This is what the market demands. If we proceed from saying goodbye to America, then these measures are extremely unproductive. And here you can argue, because there is a discussion about de-dollarization. It seems to me that this is a very big topic that people do not understand at all what dollars are. There are no dollars in the world. It's just a unit of calculation, and the systems are effectively sharpened for it. From the point of view of managing balances, that's it. There's nothing else. You could have done it in yuan, but the situation turned out the way it did. It's just a historical evolution of the banking system. And now, if you look at the last few days, it's interesting. We're watching the de-dollarization. India seems to be buying oil in Russia. China seems to be giving the opportunity to trade in yuan. And from the point of view of China, it makes sense. They are a huge exporter. If they can buy some resource elements in their currency, they can just pay for the products. You have a small currency risk. And if we look at what is happening in the currency market in the last couple of weeks, look at India, look at the Brazilian real, look at the Korean won, everything just falls to the dollar like a stone. The only thing that does not fall and relatively stable is the yen, which can tell us that the situation is getting worse. This dollar liquidity is the needle that everyone wants to get off. It is impossible to get off it. It is too effective. And accordingly, now the Japanese are beginning to withdraw capital, the yen is growing a little, and everyone else just sits without money.
And I would like to ask about, I think, the viral idea about Bitcoin as a reserve asset. What do you think is it possible, and what are the factors that make this scenario unrealistic now?
I think it's a beautiful story that will happen in a real life. Well, look, let's just see. What is the whole trick of this whole system that exists? We, as people say, we need real solid money. It used to be gold, but gold, there will be a meteorite. 200,000 tons will fall and gold will be devalued. But Bitcoin, it's only 21 million and nothing else will ever appear. This desire for some certain element of security and, as you know, some value, it's just in your mind that gold costs as much as it costs. It's all just your imagination and how it is created by society. Everything is fine. But switching to the gold standard or to Bitcoin will have extremely negative consequences for the standard of living around the world. Because the system that we have now, it was originally beautiful. Just look, we have made such a huge leap since the 70s. By and large, 8 billion two-legged creatures are able to move. And in fact, most of them exist relatively normally, do not die of hunger, well, excluding a couple of regions. This is exclusively the possibility of this system we have, the banking system, proper capital insurance, because the elasticity of creating money, which is in the hands of the banking system, when they can determine that there is a need for capital, we can earn on it. They can effectively distribute it all over the world. As for the gold, the element of safety, I wonder why, let's say, all these problems were from the First World War to the Second World War. When the Germans made a contribution, there was a huge overflow of gold reserves. Why then, if I'm not mistaken, Roosevelt, in my opinion, canceled gold, bought it, and then devalued the dollar. This is a very strong limitation. And the cyclical actions of Thaus, who has the strength in the economy, they start to attract gold to themselves. Then the dynamics become the opposite. You do not want to have a basic asset as such, as the basis of the whole system. Another question is that gold will have its obligatory part in the new system. Of course it will, because you need an asset that will estimate, let's say, the cost of money. If the Chinese and the Indians trade, how do you determine what is worth a rupee and what is worth a yuan? But the imbalance in gold can certainly be assessed. And Bitcoin can play the same dynamics. Bitcoin, in my opinion, will never become a reserve asset. This is a completely useless thing. And Trump is just pumping this topic because in these elections, crypto was a pretty serious argument for the electorate. The fact how Bitcoin was originally conceived and what has happened now is two completely different things. Because if we consider Bitcoin as an independent, decentralized system, we can call it calculations or savings because it has the final number of units. We have turned through ETFs and the options market into a transaction unit, and you can't change it. It's a speculative dynamic. I don't think that Bitcoin will certainly obtain its place, but some new systems will be built rather on some algorithmic stables like Luna, but I hope they will come up with something better.
Without the same consequences?
Well, we will find out, but in any case, for me, Luna is such a clear sign. We tried. There was certainly a lot of bugs laid down initially in the system. It could have been predicted, but once we fall, we will fall again. We will take artificial intelligence, we will pull it, and in some direction we are moving. And plus, the only thing we will have is the ability to control the level, whether we will have a level of control at the state level, and whether we will have a level that will be, let's say, uncontrolled and to serve the private sector without full control, as they say about CBDC, but with some element of the private sector and the private creation of money. So far, if you read the Bank of International Settlements, it is still open to what we will come to.
Sasha, please tell me, if this trend of Bitcoin as a reserve asset does not come to fruition in 2025, What other drivers of growth would you highlight for Bitcoin in the coming year?
For Bitcoin, in my opinion, at such levels, the main driver of growth is fear, panic. Well, look, if you follow me, we communicate with you, you understand that by and large, the entire industry of financial advisors is built on some element of intimidation and fear. Fear is sold well. If the usual financial press always sells upside, let's say DAX went for 20,000, let's invest, everything is fine. Despite the fact that you go out on the street and understand that this country is in a big trouble, in YouTube, the majority is just such a panic mood. Everything will collapse. We will have a denuclearization, a nuclear bomb will be dropped. Everything will be in horror. Accordingly, this is just an element of some kind of sale. And the more we enter the media phase, when the element of intimidation and fear prevails, the more people are trying to find an element of getting out of this system, especially if we are talking about people who were born in the Soviet Union and still remember how the collapse happened. Then you woke up today and you have nothing at all. That is, you have a savings book, you had it, and today you don't have it. Yesterday you had a Volga car there, and today you can't even buy candy on it. And of course, if we say that the West doesn't experience such extreme situations, people are not ready for this. But I think that especially after COVID, over the past 4 years, the wave of fear is increasing. That is, if I look at, for example, German economists, 2 years ago, everyone took it easy, everything was great. But now, from any point, everyone is like, well, that's it, we're here, the final stop, guys, we're leaving. And people look at them and think, what should we do? As a rule, in a specific situation, what happens to you? Look at the elderly people. For example, I have parents who are 75 years old. I can't say, Dad, open your wallet, I'll give you this ledger, you can load Bitcoin there and everything will be good. It's just impossible to explain. In this labyrinth, you will get lost and you will not get up. That is, for these people, for the older generation, gold is a very understandable and accessible tool. On the other hand, we see people up to 30 or 35 years old who have already grown up in technological times. For them, the element of gold is like a barbaric stone, and it is relatively difficult to argue with this. Well, a barbaric stone, yes. What else do you want? If you understand technology, how it works, what it is created for, and faith in the fact that when an average 25-year-old European looks at what is happening and understands that if he did not grow up with a gold spoon in his mouth, he has no chance at all to get something normal in life. You automatically rearrange this person on other rails and this drive when panic begins and you understand that something is wrong. For example, Bitcoin is more of an umbrella concept. If you understand it, you will go to Ethereum, Solana, or I don't know, XRP, or it doesn't matter, Litecoin. But the fact is that you say that in cryptocurrencies, I have a chance, firstly, to earn more due to volatility. And secondly, I have the opportunity to climb up the ladder of creating my own wealth. That is, the salaries are terrible, the prices for real estate are huge, and you give the only way out of this opportunity to earn somewhere normally. And this is, by and large, the crypto market. And the more this youth is already involved, uses this tool, the more it acquires value, it acquires its own life. If you are, say, a crypto bro, you will not think, now I have $1 million in crypto. You have diversified it on hundreds of coins, some specific projects, so you believe in them, you have $1 million. And you understand that a big storm is coming to this market. The probability that you will withdraw all this money to fiat and then hide them under the pillow is likely, but within the framework, your Bitcoins place such, as it were, inside the ecosystem as a risk of asset. The fact that it has just flown is just the function of shifting two systems that too much money from the ordinary world is trying to break into this door. And what we see in ETFs, the speed of income of funds on these accounts is just huge. And of course, it drives the market. But the factor of fear itself seems to me, on the one hand, for young people, when I go to risk, it is Bitcoin, because everyone knows about Bitcoin. On the other hand, you understand that even institutionals who have a location in crypto and can take risks for them within their location, this is also Bitcoin. And the third factor is, let's say, all the developing markets that understand that banks can be closed tomorrow and there will be nothing. I'd better have something on my USB stick, have the opportunity to dump it somewhere so that no one takes it away from me. This is a serious thing. But today, the great news came out that our French friends announced that now they are going to tax unrealized profits from cryptocurrencies. And now you have a rat race. You are like a rat that will chase. The market is growing too fast. People earn too much money. No one declares anything. And now you have MiCA regulation in Europe. You can not run, but you have a market. You can have not only a risk-free asset on the market, but in addition to this, there will be attempts to surround you, to impose taxes on you, just in order, for God's sake, you haven't earned enough money there. This is an interesting trend.
Yes, listen. And when you talked about, well, first of all, I am in solidarity with you regarding the fact that you are keeping in crypto, experiencing a drawdown. If there are alternatives, where to go? What will you consider as a safe hill? And where will you go? Indeed, there are not many alternatives, and this is confirmed by the analysis of Glassnode. That is, the on-chain data shows us that long-term holders behave unusually in this cycle. Long-term holders are those who hold Bitcoins for more than 155 days and do not move them anywhere. We have a tendency that this avalanche of demand from the ETF does not meet this proposal from the long-term holders. They are sitting on it and are not ready to give it to anyone. And this is a feature of the current cycle. In the last cycle, the mobility of long-term holders was higher. That is, they were ready to sell at a certain level. But not for now, what apparently just confirms your thesis. The second point that I want to clarify about, again, this quiet harbor or fear. How do you think now the cryptocurrency market, let's say it is faced with the same fear, with it the day X? Will it be a super focus on the Bitcoin, or will capital still rotate to other sectors, coins, so people could see beyond their usual perspectives?
Look, as for the first topic, I agree with you. For me, if we take a look beyond just the cryptocurrency market, you get, let's put a great example for average people. What is, let's say, the real estate market? You have some kind of built, I can tell you about Berlin, how it is in Berlin. The figures of apartment deficit is terrible. That is, if you want to find an apartment at a normal price, you just put an ad there, and in a day you have 1,000 people who want this apartment. You choose one. That is, the price is regulated not because they can pay, but because of the huge number of refugees that we have. They need to be settled somewhere. Accordingly, the state, which is obliged to resettle refugees, is completely non-elastic in terms of price. There was a huge scandal about a guy who now, as I know, in England, he rent out 2 large hotels, and he rent out them all over, not just rent it out, he just gave it all to the refugees. And there are some completely crazy prices. That is, the state pays, roughly speaking, 1,000 euros for 5 square meters. These are figures taken from the ceiling now. But this cost for social housing dictates a cost for all market housing, whether you want it or not. They say, here the homeless have arrived, we get 1,000, you will pay 2,000. But I can't, well, then they'll say you will live in a tent then. And this non-elasticity of the demand is what gives rise to ETF, because ETF doesn't matter what price you have. You have a sailor who makes absolutely crazy things. They already obtained some more memes, the Japanese who started doing the same. They are no longer alone. That is, they already have a whole group of followers who are engaged in the same thing. But due to the fact that the market has become non-analytical, because the media is unwinding, you have, as in the stock market, what we are talking about, how to evaluate the company correctly. You don't have to evaluate anything correctly. It doesn't matter in the current situation. You get the money, it is bought regardless of the price. ETFs have completely removed the price formation component. If we talk about whether there will be S&P at 8 to 10, of course there will be, most likely through some kind of drawdown. While the ETF component will work, while the money will go to BlackRock and VanEck, they will not go anywhere. That is, the possibility is only that the drawdowns will most likely be much tougher and some money will be lost. But in principle, the dynamics will rather accelerate up than down. And in this regard, I understand why Bitcoin is not being sold, because if you relate this demand fundamentally to this dynamics, it's easier for you to sit than to twitch. The second question.
Is the concentration of the market in Bitcoin or in a rotation between altcoins?
historically, what we have seen now, everyone is looking at the index of Bitcoin domination. And depending on where it goes, everyone makes conclusions whether we will have an altcoin season or not. I don't know. I just understand that the introduction of new ETFs options, ETF trading fundamentally changes the historical dynamics. That is, all these cryptocurrencies, Bitcoin. Why did I tell you at the beginning that the vision that was originally laid out was scrapped? Because it became a transaction unit. No one tells you what Bitcoin is and why. We have been discussing this for the last 5 years. Everyone does not agree with each other. Someone says that you need to buy Ethereum. Someone says that you need to buy Solana. It doesn't matter what you take. Everyone has their advantages and disadvantages. It's just that the only component that is crucial now is the price. And it seems to me that from the point of view of a panic scenario, I can imagine that Bitcoin will, due to its legacy, have a big advantage. As far as it will be used in real and whether there will be some kind of change in the paradigm, well, there is no other application for Bitcoin except how to save some value. It is not Solana, there is no NFT on it, there is no Ethereum, there are no applications on it, so it automatically stands in this category as such an internal risk. And it's good that it exists. The question that interests me the most now is, if we are talking about the crypto system, what can become a risk-free asset in the crypto system? Because in terms of conventional finance, a risk-free asset is an American debt. If we look at what people say, what kind of American debt can be a risk-free asset given what is happening? And in general, if this situation should be as it is, no matter who is good and who is bad, you need a basis of evaluation in terms of crypto investments. If I come to the cryptocurrency market as a large player, as a large fund, the first thing I will buy is Bitcoin. A, most likely the custodials are made normally. B, I have read something about it for about 5 years. C, I understand that this is an asset that is already adjustable. And in principle, I come to the most advanced segment for me as a person from the outside. That is, in all this market, in all these jungles, I get the most, as it were, risk-free piece. Further, the deeper I dive, I go, as they say in English, down the risk curve. I go to Ethereum, then I go to Solana, then I go to Ripple, then I go to meme coins, and then I do whatever I do. But there is always a function of this risk. And accordingly, in any case, this tool will have the greatest value if we get into some critical moments.
Yes, regarding risk-free, we have questions about stablecoins here. I also wanted to ask about Ondo, which tokenizes everything you want, including itself, along with BlackRock. And they came up with the tokenization. In fact, this is a story where they have a token, they bought treasuries, tokenized them, started selling them, and now they have two products, one with a rate of 4.75, the other with a rate of 5.25. And it seems like some kind of revenue sharing with these holders. Despite the fact that we were talking about Ondo, just in March, April, it was standing, and in the end, it was shot at 2 times with an estimate of 4 yards. Very powerful. For such a heavy asset, this is actually a good shot. But there is an opinion that now the rate is decreasing. There is a cycle of decrease. When you sell a shovel, which in fact produces less gold for you, it's as if you can't grab a very large part of the market in the medium and long term.
Look, this stablecoins questions is quite interesting because we are talking here about the systematic and non-systematic crypto assets features. There are some jurisdictions where I can, roughly speaking, buy a bear for Bitcoin. And there are jurisdictions where this is impossible. In Germany, no notary will definitely prove it. Not a single notary will document that the transaction has passed. And stablecoins cannot be as a risk-free asset because it is just a calculated unit. Just like the dollar is not a risk-free asset, there is an American debt because the American debt is the basis of the whole system. And they say, if I have Americans paying 2% on bonds, respectively, stocks or some other risk assets should be based on this asset because I get a bonus for the risk in relation to which I evaluate the risk. And stable doesn't matter at all in this regard. Moreover, Bitcoin will most likely not matter either. And it seems to me that now Ethereum is the most likely to play the role here because Despite the fact that it is not the most mobile, not the most dynamic, it still has a certain history. They have changed this concept of theirs. There, they have the opportunity, simply due to the fact that they have an application layer, they can become, let's say, a starting point to reassess the risk. And it automatically gives you the right to exist. Despite the fact that Solana is better at some points, Ethereum can hold this position, which will be very, very beneficial for it. As for stablecoins, let's take Tether or USDC. They are supported mostly with an American debt. That is, we change the seam to the soap. We say that, yes, there is even a collision. We want to build a new banking system deposit as it exists now, or we want to build it without a deposit on the basis of stables. Therefore, it's stables in this form, and why I think that algorithmic stablecoins, they have a bigger future than the same Tether, because they exclude the component of binding to the current system. And we will sooner or later have to break away from it in good way or in bad. Therefore, if we look what's going on the stablecoin market now, and at the end of October, there was a special working group of FRS, if I'm not quite sure how it's called. They made a whole huge cycle. I think you can put a link to this report in the video. They released a whole cycle of analysis of what stablecoins are and how they can contribute to the financing and functioning of the American debt market. That is, the Americans and the FRS are really considering the possibility of using the cryptocurrency market to shift this additional debt load and deficits that will certainly exist for the next 20 years. And in this paradigm, by the way, again, in this paradigm, everything looks just awesome for Bitcoin. Because if you shift these debt obligations to the cryptocurrency system through the funding of stablecoins, then this risk-off element is involved even more. And then we live in the scenario of a citizen, Kate Wood, who may be right. Yes, we can now put up to 2 trillion of our debt in the stablecoin market, but this means that you need to warm up the capitalization of the cryptocurrency market. The capitalization of the cryptocurrency market is accelerating. This is automatically positive for the price of Bitcoin. It's just that the transaction component requires the more stable coins you have, the more you have a demand for the American debt, the more likely the people who sit in it will buy, including Bitcoin and other currencies. That is, for the cryptocurrency, everything looks great if this scenario is implemented in the long term. They are writing this scenario. But the only risk is what has already been said openly, that Bitcoin or Ethereum will not be allowed to control this market. We will make a special interbank stablecoin, CBDC, which will control this market. On the one hand, you have a short-term, medium-term, year or two.
You have an extremely positive dynamics, because this can create a very strong
narrative of the growth of the market. On the other hand, this market will eventually be broken and put under the control of the government to make it operate exactly as they want, not as the market wants.
I always had a question about the Ondo Finance project. If ordinary short-term treasury bonds, you as a bank, you can buy, put yourself on the balance and take liquidity for the deposit of treasures, in fact. In the case of Ondo Finance and something like this proxy, it is as if the function of the treasures deposit tool is lost. Tokenized tools, how effective they will be compared to usual treasury securities?
I've been asking myself this question for a long time, because all this discussion about tokenization, I talked to the guys in Berlin and all these large platforms, European tokenization. What is interesting is that they are talking about how they solve the problem of costs. You need to keep something somewhere, you need some custodian, a bunch of papers back and forth, lawyers, etc. We will do it all. The transaction will cost you 1 tether to do it all, and everything will be great. But this is just the effect of the multiplier, as you say correctly, after 2008, when the market broke down and the collateral became the main element of the entire system. Tokenization can potentially bring a lot of stress to these markets. It's not now, it's not critical. I would even say that it's a little too early to talk about it now, because for me, it's 5 to 7 years ahead, and a lot can change. But potentially, tokenizations actually removes this hidden leverage. Well, look, just for explanation, we have a world economy of 100 trillion. The total debt load in the world now, including households and so on, is somewhere around 350 trillion. As a result, a lot of these debts needs to be refinanced somehow, and all this is built on leverage, all this is built on certain collateral instruments. And in this market, American debt plays a primary role, because if somewhere there is some kind of deflation, somewhere there is some kind of volatility, the first thing that is in demand is just some kind of hedge funds. And there are simply not enough of them in this system. Accordingly, in this case, if you want to remove this level at all, this is an extremely unobvious task. The fact that it needs to be removed at some point is clear, but tokenization and blockchain in general, in this case, plays such a negative role in the sense that it shows elements of the work of the banking system in general. That is, statistically, up to 2008, the average paper of the American bond was deposited from 7 to 14 times. So you had 14 transactions on one piece of paper under which everything was credited. Accordingly, if you tokenize it, it becomes an absolutely transparent chain. And now this chain is absolutely not transparent, because we have dealers who are engaged in this and they just mathematically bring it all together in the system. But what appeared recently, liquid staking, risk staking, and so on, due to the fact that there is no homogeneity in different networks, you can pass this leverage through certain bridges. The issue here is that you can save leverage, but you do not solve the basic problem. That is, even if you jump from one network to another, you save the same multiplier, which is not visible somewhere. And how much, where in the end the coin or something is transferred, it becomes unclear in the same way as now. And we need to move to some new system paradigm. Actually, there is no solution for this at the moment.
Sasha, success and status are habits multiplied by their systematic execution. Therefore, when talking to the strongest people, it is always interesting for me to find out how they plan their day, what the necessary elements should be here. Tell me, please. Do you have any investor rituals that you perform regularly in any case?
I walk my dog on a regular basis. I don't do a lot of active trading, so I'm much more relaxed. I usually go to bed pretty late because I usually write all the analytics that I have at night. I'm a night owl, so I try to balance my unusual schedule with sports. Thanks to my dog, I spend at least 2 hours a day outdoors, regardless of the weather. But if your viewers have a need to understand how you can plan your day as a trader, there is such a woman. Her name is Denise Schul. We will send a link. She is a very famous coach, a trading psychologist for New York traders on Wall Street. And she has her own book where she describes in her eloquent style all the phases of the trader's psychological state. When a person flies very high, feels like a god, and then also falls hard and feels like the biggest bum, she just gives specific recommendations on how to avoid it. I tell everyone that if you want to do trading, this is not an occupation that can be done with bare hands. That is, it is the right approach to nutrition. It is the right schedule of the day. It is a mandatory sleep. It is to listen to the inner instincts. It seems to me that from the point of view of trading, instincts are a very important component. It is an opportunity or an attempt to constantly remove the emotional component. If something triggers you, it is better to take a break. I have a rule that if I go into some kind of deal, I am already emotionally, I know that now I will invest. I will always wait a day or two, no matter the price. I just understand that I have an inner determination that this deal is right at the moment. But in my current emotional state, I will always wait a day or two to see what I will feel next. These are the rules that I have developed for myself, because there are moments when you rise, when the market goes with you, and it seems to you that you become like this. Well, I can't make a mistake, and often you hit the asphalt with your face because you begin to ignore some internal elements of doubt, elements of the psychological state. I completely turned it off, and that's why it always takes me a day or two to make a deal. I also understand that everything that seems to me to be relatively poorly broadcast, and that in a recent interview with Stan Druckenmiller, he is considered a legend. This is a person who for 30 years of his career has never had a year with negative profitability. That is, the average income of this person was 30% per year. It sounds like some kind of casino, but for 30 years in a row, he could constantly, regularly show this kind of income figures. He basically said the right thing. Well, let's rather say the thing about how he approaches it. In his understanding, he says that there are two types of people. There are people who can analyze the situation, who understand what is happening and see trends. And these people, as a rule, are completely worthless traders. And there are people who just have intuition. There is a gut feeling that is, emotionally, how to get into a position, when to get out of it, when you need to increase it. That is, you are a player. And that's why in many hedge funds, you have a clear division between the analytical individuals, or let's say people who are looking for, reading, inventing, doing research, to say, for some reasons, we will now work. Now we will go upstairs. And you have people who are engaged only shallowly. They say, okay, I understand. And the technique is turned on and they play it. From my point of view, I can't play at all. For me, the emotional load is so high that I can't handle it. I'm more in an academic environment where I can sit, talk, and tell someone something. But this division is present. As a rule, these two skills are incompatible. This is a very rare component. Therefore, if you are a good trader, it doesn't mean that you will earn money. It doesn't mean that you understand the overall picture. And vice versa. If you are the smartest and you know what to do, it doesn't mean that you will make money on this trade. These two things need to be clearly separated. I have been working on this for a long time, and I understand that for me, relatively low trading strategy suits me much more than the constant opportunity to get some additional dopamine from trading. To be honest, I don't know how to explain it. I don't think that I came to the final point of view with which I will agree. This is a constant search where you can learn something new. But I believe that financial markets give you the opportunity to learn a lot about yourself and understand who you really are.
I see. And in this regard, of course, I would like to ask, how did you come to the financial market? What influenced you in your youth? What aroused this fire and romanticism in relation to the market? What was it? Maybe literature, movies, the environment in which you were in those years?
I was forced. In fact, the story is that in 1994, when I was still going to school in Estonia, my father certainly had a question where his son would move. Given the general situation in those 90s, this example is quite widespread. It is clear that parents have experienced such a severe breakdown of the system, and in general, many people's lives were broken. Of course, in the first place, they prioritized stability for children. What did stability mean? Stability meant high quality, high paying work. As a rule, it could be finances, it could be jurisprudence. My father and I talked about it. He said, what do you want to do? Because you had to decide where to go. You had to prepare for something. At that time, it was just a mixture of the 90s and crazy money. Bad guys on Mercedes, girls, hormones are beating you through the edge. And you understand that they say, I want that. And the question is, how can you get there? And at that moment, finance turned out to be, plus the banking world, it turned out to be like this. Wow, cool. Bankers run everything. Why not try? I fought this very hard because in principle, I threw it. I worked in a bank. And then when you go through several such paths, several such levels, and sooner or later, I still return to this. In the end, I will say that I came there purely because of my status and money. And now it's rather an incredible question. It's like playing chess that is complexity that is not subject to analysis and a desire, as the classic said. If you can't gnaw the granite of science, then at least lick it. That's what I do. I'm trying to lick the granite of the science. That's why I ended up somewhere in the macro.
Tell me, please, if you had the opportunity to leave only one book on the financial economy, which you would have to read until the end of your life, what kind of book would it be?
It's definitely not the Ray Dalio that you have.
Sasha, we will definitely add here for our viewers that even though you told me to burn it at the beginning of our conversation, first of all, the manuscripts do not burn. And secondly, I really like it myself. I read it at the age of 17. And in fact, it also influenced my choice. So I would like to play it out for our subscribers, listeners. This book is definitely with an analysis from Banana Capital. We will put a brochure inside. We will send the one who will ask the best question to Alexander in the comments. We will choose together. For today, the award is Ray Dalio. Next time, it will be something you will advise us.
Incredibly difficult task. I will overplay a little. If we are talking about something that I actually read and review many times, I have a favorite documentary maker. He is an Englishman. His name is Adam Curtis. He is an incredible person. He has a documentary company. He has been filming for the last 20 years. And in principle, they last from 5 to 8 hours. They're all on YouTube. They're all free. He looks at the whole world from the point of view of sociological processes. That is, he says where society is going. What were the historical events that turned the world in a certain direction? Where we are moving. His last film was, I think, 2 years ago. It's called I Can't Get You Out of My Head. In English, it's called I Can't Get You Out of My Head. I've watched it, I think, 6 times already. And every time I constantly come across some new triggers. I rewatch it every 2 years. Sooner or later, I always turn it on. Like I listen to it all the time. There are movies from the 90s, 2000s. The picture of the world that he exposes is certainly subjective, but it's a very interesting fact. I always recommend it to everyone. They say that, if you want to look at it from a macro point of view, then of course, this is the biggest inspiration for me. From the point of view, if we are talking about specialized books about trading dynamics or active trading on the market, then I would recommend the book by Benoit Mandelbrot, Misbehaving Markets. The theory of fractal analysis, how markets work, is purely a market topic. I read it once. I will not read it again. But the book, from this point of view, is certainly cool. If we talk about a slightly more historical context, giving a certain logic, we live in narratives. Jerome Powell can do something there. In this case, it is very interesting from a historical context. I don't remember the author now. He has such an oriental name, but it is called Lords of Finance. He described the biography and relationships at the beginning of the 20th century, the 4 most powerful centers of bankers. These are the United States, England, Germany, and France. They communicated with each other, argued with each other. And here is a very interesting fact which shows how this system worked then, again about gold. And it would be interesting to hear if you think that Bitcoin can become a reserve asset, because logic has not moved anywhere and we just have the cyclicity of our life. It will come to us sooner or later. Therefore, for those who want to read something interesting for free, Education in a Global Big Picture, Adam Curtis. For narrowly specialized market friends, Benoit Mandelbrot is an option. And if you want a little historical context, this is certainly Lord of the Finance. We will give links to the author later. I just don't remember.
Yes, we can also ask for our Banana Capital channel to publish a PDF version of these books in a separate post. Thank you, Sasha. Next, I want to talk to you about your experience in interacting with investment funds and investment structures in general. I know that there are many strong managers among your circle, for example, Pavel Melamed, Aquarium. And within the framework of management, do you trust only yourself or do you also have allocations in investment funds?
The question is, I have allocations in investment funds, but the logic is rather diversification. I mean, we ride on some rails, right? When I'm telling something, I have some vision of the way. I perfectly understand that I'm standing in front of a mountain, a 5-meter mountain of snow, which fell in 2 days, and I cleared myself, let's say, a piece of 10 by 10 meters. I don't know how deep the snowfall is. I don't know the width. I mean, I'm guided by my own limits. I'm trying to project my knowledge on the general world, despite the fact that in any case, it is impossible to assess even approximately what is really happening. Therefore, the whole economy, all investments say that this is just a theory of probability. You may be right, you may be wrong. 50-50, you are already a good analyst. You just need to manage risks correctly. There are people who have, let's say, a clear narrative that they sell. What do I mean? Let's take a person who's called Brent Johnson. Brent Johnson is from Santiago Capital. He invented the so-called milkshake theory. milkshake theory is that before the global collapse, which everyone is preaching, that it doesn't matter what happens, at first the dollar will rise by 100 to 200 somewhere up, everything will fall apart, and then the dollar will go crazy. And in this case, due to the fact that I have been involved in this scheme for quite a long time, the logic of its possible developments is very clear to me. I understand that I may not be able to apply it in the same way as he may. And in this case, there is a component that says, okay, give me 10% and you will do this for me, despite the fact that, as a rule, he also has such an individual approach. He comes and talks to you. What do you need? How much do you need? What are your allocations? What are your goals? That is, everything is adjusted for you. You tell him, I expect only one thing from you, this and that. This is what allocations are made from. There are certain things that, well, let's say we understand that the markets are completely on high. And the question is, well, how much? Well, we will grow from 6 to 6,500 on S&P. That is, your growth potential at such rates is quite limited. What can you do? You can hedge yourself. You can engage in option strategy. You can play shorts. That is, you can speculate on this topic. But there are certain guys who are exclusively for such, as Nassim Taleb says. If you read, he says that this is called tail risks. In the distribution of Gauss, you always have some risks. And in the current situation, we rather say that the distribution itself has very fat ends. There are specialized funds that specialize in hedging these ends. That is, they cost you about 2% a year from your portfolio. But at least, roughly speaking, if S&P falls by 20%, your portfolio beats 20%. They do not work at all in a normal environment. That is, if it fell by 3 to 4%, it does not work at all. But 2% of the extreme hedging of their risks, I think this is super. I don't have to do anything. I know that they are built only on this. They can do it due to the volumes. They have a good price. They can roll the options correctly. And this is much more effective than I will do it myself. And it will not be a headache for me. If we talk about investments as such, a large number of customers come to me and say, what do you want? The question is, what do you want? You can earn a lot of money. I don't want to lose. Everything is individual. Someone has more money. Someone has less money. And in the end, you always have a binary choice. That is, you need to go to the right or to the left on one side. You say, okay, I don't want to do this at all. Then you go to some professional manager. But you have to realize that in this situation, the manager is always playing against your interest, because the manager gets your income when he earns something. He is interested, speculates as much as possible with your money. Therefore, even if he sees that everything will turn to hell, he will never leave the market and you will go down the market. Yes, he can then close the positions. That is, you do not need to do all this. It's much easier. But you have to understand that your vision of the world and the situation will not be taken into account, because you have the incentive of these guys to be 100% into the market. And the second opportunity is to do it yourself. The main base is what I tell my clients, that guys, I will not invest your money. I will train you so that you have a context for making a decision. Everyone has individual cases. You have to come and understand that if I have a 20% position in Tesla, what should happen so that this 20% position goes down to 10% or 5%, or I expand it to 40%. And this is not just in the context of one position, as many think now, and in the context of the overall portfolio. If you just raise Tesla from 20 to 40, then you need to sell 20% of the portfolio. This kind of regulation requires involvement. And I say this as common sense, because people who can just think normally usually show profitability not worse, but maybe even better than professionals. Because you don't have, I've been doing this for years, I'm sitting in a certain tunnel, professional deformation is actually present. I can talk about something specific, about something more abstract, but sooner or later I get into a certain scenario and I start to defend this scenario. This is for everyone. If there is a possibility of a combination, then this is better. If you understand that there is this tunnel view, then some things can be put aside a little, not touched. Some things are better to do yourself, just from the point of view of understanding the processes. And it seems to me that the period that we are now entering, it will still make all people think more about how to save this capital.
Well, I realized that you are betting more on parachutes here, roughly speaking, that is, on the tails of this distribution. What do you think about delta neutral strategies? I will explain a little here. Our fund, we do not only deal with cryptocurrency, we earn money on market inefficiencies. Our first strategy is arbitrage between Chicago and Moscow. The second is the role of market makers on decentralized platforms. We provide liquidity of the market, and in return, we receive commissions from traders on the volume of trades. And in general, regardless of the market phase, we remain independent of the movement. Plus, it doesn't matter to us whether there is a recession or not. Tell me please, in your portfolio, is there an exposure to something delta neutral, and do you feel the demand from customers for such strategies?
As for the problem with this topic, it's no, I don't have such issues. I'm more of a long only plus hedge. The topic is actually interesting and you can work with it. The problem is that, not even a problem, you have a specificity of such funds because there is a very narrow circle of people who understand what we are talking about. If I sit in front of you now and my dad or even my wife, and you will explain to her what a delta neutral strategy is, then one of you two will definitely go crazy in 5 hours. The specifics of this activity imply a relatively narrow circle of people. But what is the beauty of these strategies? Your specialization in this industry has led to a huge demand for such things. And especially when we talk about retail, that these intraday options or 0DTES suddenly appeared. These are the dealers who sit on these books. They have to hedge this delta all the time, roughly speaking, just not to get into trouble and not to be at risk. And this creates such a huge amount of inefficiency that in principle, you can live perfectly on it, not getting into some huge multi-billion deals. There is just a problem with the clients and how you will sell it to someone. It is unlikely for retail.
Family offices, funds, management, which need to place client capital somewhere.
I agree. Family offices, I would expect that family offices could do such things themselves. Well, in the end, this is certainly not rocket science. If you have enough money, then both brokers and dealers will give you everything normally and pricing, and it is easier for you to do it yourself. To take a person who will just sit at the base with a bonus and in principle will provide the result. But if there is a high net worth individual who thinks that he wants to do it more or less himself, then yes. I like it because I understand that it is a very specific market. You cannot go to retail because you need certain volumes. On the other hand, it is very difficult to explain this to someone. For institutional, the fact that the crypto era has come is generally heaven. We are now considering a little bit, I have such a project, we would now be happy to go into market making. You have so many opportunities there because the market is still developing. Despite the fact that it is growing quickly, it remains dumb. That's really, the market is still dumb. And that's why all the hedge funders, they ran to the crypto market. You have 95% of the algorithm trading in your shares. And now you need to put AI agents and have servers as close as possible to the main distribution center of the exchange. Everything that could be squeezed out is squeezed out there. And that's why such a Wild West in crypto attracts a huge number of people. And I think this is an interesting topic in itself.
Speaking of the fund deals with delta neutral strategies, works out inefficiency. Imagine you are the manager of such a fund. What questions would you ask? What would interest you first of all?
In my experience, how to choose a fund. Who did I talk to? The problem of all funds in the industry is the narrowing of the capital horizon. A person comes and says that he has a super strategy, but it can hang around for 2 to 3 years. Not in your case. Accordingly, we come and say, do you agree to give me money for 2 years and not pull them? Everyone says millions of yes. And in a week, they start causing you a headache because S&P grew by 10%, you went to 10 minus. And this is a very big problem for funds that have such exotic strategies that need to be explained. What I saw, you come, and for me, the factor of empathy plays a very big role. I would always look who is in the team. I would always talk to others who know this person. These are recommendations, and the recommendations are not from the outside. What the track record will draw for you is not indicative for me at all in any case, because I had such an investment in the fund, which first went into a rather serious downfall and then just shot again. And in all the marketing communication that was being built by this fund, it just ignored this initial drop. And all your performance, which is, you show the starting point is important. If you put January 2020 or April 2020, you will have two completely different indicators, two different worlds. That is, you can draw anything. This works in all financial spheres. Banking also draws the main things that it looks beautiful. That is, they will draw beautiful statistic for you one way or another. For this, there is a statistic to draw it beautifully. It seems to me that a person who can explain, look, give me a year or two, do not touch, there is a strategy, explain how it works. Explain that and honestly say that, listen, I can lose the half of your portfolio. There is such a person, in fact, Pierre Durand. He is a speculator in the oil market in Switzerland, a completely crazy man. In 22 and 23, there was a 50% drop of his portfolio. You look at him and might think he will just be taken out mentally. And no, after 3 to 4 months, he just recovered and came up with some huge pluses. The function of your high earnings depends solely on your ability to take risks. And the ability to take risks depends solely on the element of trust. Do I trust you with the ability to say that even if it's bad, you can fall, you cannot fall? Well, some kind of human component. If it is present in you, then I agree to risk. In the end, it's just a simple belief in the team. As the ventures say, we believe in the team because you will still be stuffed with some kind of crap, like here we have super products, all this. There is nothing of this ever. But if you look at the dudes, there are some certain characteristics you put check, 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 check. Okay, let's try. And 50-50 again, like with dinosaurs on the streets of Moscow. And this is how it happens.
Speaking of statistics, for example, in the market of decentralized finance, everything is quite easy to check. That is, you have all the data on chain, you can check any fact check in any case. And here you will not remove data from the blockchain. So maybe hedge funds in the world of decentralized finance have an advantage in the form of a clear track that can be validated. I just wanted to open up a little for our audience what we are doing and hear your opinion on this matter. I'll start with a strategy that is actually called liquidity in the pools on the market of decentralized finance. But in plain language, what is it? I think many have heard about Bybit Binance. In the world of crypto, this is not the only place where you can exchange assets. There are also decentralized exchanges. They work on smart contracts. This allows the market participants to trade without intermediaries. The advantage is that users' funds are stored in their wallets. So there is no risk of scams, as I was in the case with FTX. At the same time, decentralized platforms need to solve an important problem: where to get money so that there is always money on this exchange to ensure trading between participants. And if decentralized exchanges are market makers who provide money in exchange for commissions or something else and help create this uninterrupted process of buying and selling assets, then on decentralized platforms, we solved this issue with another technology, which is automatic market making. And we, as a fund, make money on this. We are the market makers, those who actually make the market. We place funds in liquidity pools, provide them to traders, and in return, we receive a reward, that is, a commission for a deal. And here, in this sense, if on centralized platforms the exchange gets the commission for a deal, then here we get it as those who provide liquidity to ensure the volume of trades. Actually, we provide the client with the opportunity to work with us. In fact, the strategy is risk-free here, but there is another direction of this strategy. This is a story where you concentrate your liquidity in a certain range. You can spread it all over the market and give it to all traders, or you can narrow the range. And then we have in traditional finance, it is called gamma risk. In crypto, it is called impermanent loss. And it can also be hedged through an option model. Thus, if we draw conclusions, then we have funds stored at the client's wallet. In fact, the nature of the origin of profitability is a commission from transactions. That is, the volume of trades is important here, so that there is simply a volume of trades on DEX. There is a risk-free option where you just cut on commissions, but at the same time, it is important for you to have trade so that there is interest in the market. A more risky option is where you concentrate liquidity in a narrow range and use options as hedges. In the context of this description, if it's clear for you how it works, do you know this area?
Yes, super. In fact, in this topic, you need to reach, if you build it yourself, you need some certain volumes so that this chain works for you, because you are not the only one who feeds from it. You need some kind of banking, all these things, other market players, they must work. We are also considering this topic. Well, let's say we put 5 to 10 millions there and you will be fine. You can work well and the market is large. There is actually a need. If we have a discussion that we have no risk and here we can hedge all this, at the moment it certainly looks like this. I'm all for DEX and everything else. It's all great. It seems to me that at some point we will just screw up this whole construction because a lot of things get stuck. Initially it was on the monorails, then we decided to reconnect it all, and these connectors that are everywhere, vaults, bridges, and so on, sooner or later this topic will take on such volumes that it will simply not be able to bear it. In my understanding, the cryptocurrency market as it exists now, it is quite difficult to evaluate it. We will most likely feel we are somewhere in the dot-com sphere. This does not mean that this market will not work. It will work. It just needs to be cleaned up a little. From the point of view of market making strategy, I am extremely positive about this. It seems to me that if you don't do it, there will always be someone who will do it. And accordingly, whoever comes first will tear off his piece. And you are great here in this regard. And when I follow you, I see that you have a clear strategy, a clear understanding. Can you make it 100%? That is, as in 2008, when, what was the whole trick of 2008? When the whole system is built on, let's say, classical finance, on the value at risk system, VAR, at times this system does not work because, and in crypto, this is actually the same thing, because all financial models that estimate risks, they have nothing in common with reality. When in 2008, they all broke down. Instead of changing it, we just made these models even more complicated. And now no one understands what is really going on. And that is, you have a risk on a risk. It is hidden until it can't be hidden anymore. And in this regard, the fact that you can, through the option hedge or somewhere hedge or say something neutral, it is certainly so, until we find out that this is not so. What will the system be expressed in? That is, we do not have with FTX. Yes, there was such, we can call it a systemic run. People ran and opened up. What kind of fuss was there? It was just some kind of unfamiliar office. Billions were rolling from one side to the other, and no one seemed to know about it, although in fact, everyone was playing it. The question is now what will happen when, like, we cleaned everything up, and the risk is just the incentivization itself has not gone anywhere. It has become more and more difficult. I hope I'm not talking nonsense, but I just see it myself when we talk to people. What you are doing, without it, you are nowhere. That is, your timing is generally very cool, and I would do it myself if I had the opportunity now. But the structure of the market that is built, all these strategies, delta neutrality, again, the ability to use DEX, yes, there is a future for this, of course.
Let's then smoothly move on to the topic of risks. Let's talk about risks. In 2023, one of the most popular fears for investors was a recession in the United States. This is confirmed by the record number of requests in Google. In 2024, the dynamics were significantly reduced, as if the recession was already going into the background a little bit. At the same time, I want to quote Nouriel Roubini, who said in 2023 that a serious recession is the only way to contain inflation, both price and supply. But this, in turn, makes the crisis in the market worse for a long time. And I have a question for you. What do you think, at the end of 2024, in December, how objectively does the current market assess the strength of future recessionary effects?
I have no point to assess it. DAX 20 plus. For example, the German index is an all-time high. You open a newspaper, there are 10,000 people in Bosch, Volkswagen is closing its factories. And here is a list of all the top 100 companies. There are huge waves of dismissals. Everyone perfectly understands where all this is going. We look at the market of the same America, where a large number of, it's all artificial, in fact. If you look at McDonald's, McDonald's says that, damn, the guys don't have enough money, so we issue special offers there for $5 so that they can eat it all. McDonald's is, well, it's kind of completely basic. It is a constant deterioration in all indicators. The labor market has been recalculated. A report has just come out. That is, they have the main indicators, which are every month in the market, non-farm payrolls and other ADP employment. And you have an indicator, QCW. They calculate all the real numbers with a big lag. If last year it was considered that 800,000 jobs were drawn, or there were too high numbers, now we are talking about 1.5 million, which do not exist at all. And if you look at the labor market in America since 2010, after 2008, when the system broke down, all these restorations, the labor market, the number of jobs, which if we had grown in the same pace as before when everything was fine, then now in America, only 10 million jobs are missing. And this is despite the fact that 4% are unemployed and so on. There is a permanent distortion of economic processes. That is, the growth that was initially laid down by all markets. It has deviated. And we are now just really ignoring it. Therefore, in my understanding, even what we have been talking about inflation for the last couple of years, we haven't been even close to there yet. With this inflation, this deflationary jump, what we saw during the pandemic, this jump in inflation will have such catastrophic processes. It will lead to such geopolitical, what we see now, in fact, is also an economic component. It will lead to such a huge crisis. Therefore, in this regard, it is quite difficult for me to say that it is not a recession. As for statistics, I tell you that if you see it, you can adjust to it. I see it, I can adjust to it. I have a bunch of people, I have special guys who have opposite opinions. They trigger me. But I understand that you can build today, explain to them that the development of events as it is important to you. And I'm not saying that I'm right. Most likely, maybe I'm wrong. But the situation that I see, well, maybe another year, maybe there, but the 25th year, it seems to me that the 25th year can be such a nasty duckling of the repetition of the 22nd. Somewhere there will have to be an end to the general possibility of pulling further and further.
Here we can also say that the market can remain rational for longer than the investor is able to pay. And we know many who are shorting America from 5,000 and are still shorting. I have an interesting statistic. When I perform at the end of September, I looked at what was happening in the US economy after the first drop in rates, and whether it was possible to make a soft landing without a recession at all. And I noticed that out of all the cases, there are 3. I went deeper into the context of these cases when we had a soft landing, when there was no recession on the horizon for 6 months. And I noticed that our current year is very similar to those cases. In particular, there are 3 parameters there. This is S&P 500 dynamics, retrospective for 12 months, average GDP figures and inflation. In short, in the 1970, 1995, 1998, S&P grew by an average of 16% in the last 12 months. This year, we have 28% S&P dynamics. The average GDP is 4% there. Now we also have around 4%, considering the deficit. And the average value of CPI, that is inflation, is 3%, and now we have 2.4%. In this sense, we have 3 out of 3 hits in the context of cases when the US economy managed to land without a recession. And my question to you is, what indicators are you guided by? What will tell you, warn you, that you have a recession in the near future? Well, in terms of timing, we have determined here that you think that a year or 2 is such a period.
Listen, you have formulated it perfectly. By the way, I do not agree with your statistics because in general, the concept of soft landing is quite specific. And again, if you say 95 to 98 years, well, again, we need to look at the 75th year, the composition of other factors, the amount of long-term ratio to GDP, the ability to stimulate the economy through certain things, the level of rates, the speed of rate decrease. If we look at 2019, when this whole thing started, the average growth of GDP in the US was 4% higher. In principle, when Citizen Yellen said that this recession is over and now we will raise rates, you will not feel anything at all because we have economic growth. Do you remember this mustached fellow? El Arian, the main one, who was a bond trader, he shouted that all three stocks will go to 6%, and the dynamics appeared as it is. That is, the pandemic, it is not that it has changed something radically, it has simply gone through what it was. That is, in 2019, it was already clear that this was not a local event at all. It seems to me that the discussion of soft lending or not soft lending is extremely counterproductive because we are losing the horizon from the point of view. Now, for example, I can imagine and say that the short-term business cycle, due to the fact that we constantly fell, it will go up. And we will see the rise of these indicators, PMI, ESM, and now there will be a slight rebound and the market will go up again due to the fact that liquidity will be given. But if you zoom out for 20 years, you will understand that nothing changes. In the context of the 20-year horizon, a small hook will be drawn at the top, which does not change the overall trend line in any way. S&P is not an indicator at all. For me personally, it is an indicator of some kind of recessionary dynamics or non-recessionary dynamics. This is not an economic indicator, although in the current situation, S&P becomes a media determining factor. GDP and inflation are factors and indicators. They are late. That is, you have three different phases of indicators: leading indicators, coinciding indicators, and late indicators. GDP, inflation, when these data are drawn for you, the world has already run 10 years ahead. And accordingly, you have a huge number of indicators that tell you where we are moving. If you look, first of all, let's take an example. Let's say you look at the cyclical industry. This is the production sector. These are new orders. That is, if your industry believes in the future and says that we have growth in the future, I will hire staff, I will have new orders that I need to process. According to these indicators, everything looks terrible. There is a special index of leading indicators, and if you look at it, they have been falling for 2 years. They have been falling for 2 years, but there seems to be no recession. How to understand this? Due to the fact that after the pandemic, a huge number of things were mentally changed, even the employment market. When we say that you will throw someone out of work and you hope that now they will give us money and we will earn, you do not kick out the staff. On the one hand, the marginality should be reduced somewhere. You understand that if the turnover goes up now, you do not have the right not to get this profit, which if you fire everyone now. At the same time, you understand that until this happens, I will now automate everything under artificial intelligence and so on. Well, you see it in big companies, even Magnificent Seven, they fire people like crazy. But in principle, if you find normal men like Elon Musk, who kicked out 80% of Twitter, the company works well and work better than before. And in principle, in large companies, you can, in most of your own, you can do exactly the same. And the blockchain is the same for the bank. You cut off 80% of the costs and it's fine. 80% of the staff in banks is administrative staff that pisses everyone off and doesn't do anything. If you can technologically remove it, it's generally super. Of course, you will push it. And accordingly, it just stretches and stretches and stretches, and the information component push you. So you think everything should happen quickly in this month, and that's it. Everything has changed and the world has changed. The process may take 2 years. If you impose certain things historically, then everything is clear there. Reducing rates is not a stimulation. It is just an indicator that everything is very, very bad in the economy. As a rule, a reduction in rates is the first indicator that leads to a huge increase in unemployment, and an increase in unemployment leads to a complete dynamic, respectively, deterioration of the economic situation. We are just entering a crisis. Although we have been in it for a year and a half, we are just stretched this time, in my opinion.
Sasha, the last question, and we will move on to the Blitz. What is in the portfolio of Alexander Kubоschkin? This is our rubric. Sasha, you said that you have Bitcoin, Ethereum, and Solana. Please tell me what should happen so that you can consider other altcoins for your portfolio.
I don't know. It depends on the situation. If I read something and face something, I can try it. I had Ripple in my time. I just got tired of talking about it.
You didn't wait for X, did you?
No, I didn't. I've been going back and forth with it for a long time, couldn't do anything, and in a couple of years I'm back to zero.
What could you highlight now?
So far, I'm more satisfied with what's happening with Solana. I'm okay with my portfolio. I'm telling you, it's 10 to 15% of the entire portfolio.
And now, from those projects of 2024, what could you highlight? Maybe what did you read? What was your interest in?
Crypto projects?
Yes.
I'm trying to do my own now, so I don't read anything.
You will invest in your own.
We will not advertise this.
Not projects, but tokens? So now there is Ethereum, Solana, Bitcoin, something else? Or is this enough for you?
I'm not going any further in my current location.
Well, friends, now we will have a blitz. I ask short questions. Alexander answers, but not necessarily briefly. Let's go. Do not buy Bitcoin or do not buy Solana.
Do not buy Bitcoin.
Spend the whole of 2025 in dollars or in yuan.
In dollars.
Would you agree to place all your capital at 21% in Russia?
No, of course not.
In general, would you agree to place 10% of capital at 21% in rubles in Russia now?
I would agree, but there is no possibility. It's a difficult topic. I believe that for people who are in Russia, it is easy to fix this rate. If there is some kind of federal loan bonds for 10 to 15 years, you can fix 10 to 20% of capital easily. The rates will go down very seriously. In any case, what the central bank is doing now will change.
What is your favorite drink?
Wine.
Have you ever poured wine into the glass that you have in the frame during the FinFak broadcast?
Of course.
If you had the opportunity to invite anyone to the CEO role, to the role of your business partner, who would it be?
Well, this is a question from the point of view that there should be some media component.
Anyone, even Musk.
I don't like Musk. I kind of understand that he's a guy who really created something. I don't like Steve Jobs.
Maybe it's Alan Turing.
You've completely driven me with Turing. You'll suffer to take him to the toilet. I would also call Vladimir Vladimirovich Putin.
It's an interesting choice.
Like this will hit everyone.
As they say, you don't have to call him, he comes himself. Ethereum or Ton? Vitalik or Pavel?
Tom.
The narrative on the crypto market with the greatest potential for the next 2 years. RWA, AI.
It seems to me that tokenization will definitely come to the next level. The question is how to deal with leverage, because staking in the current form is quite poor. So far, I don't really like the solution. RWA is, in my opinion, what it looks like now, it's trash. I think in 2 years, we will understand what will happen. The main thing that will happen, we will understand there will be retail CBDC, wholesale CBDC, and what mix of them will be made. This is the main development, I think.
If you had to take one and only one asset for 2025 in your portfolio, what would it be?
Gold.
Okay, Jerome Powell or Ben Bernanke?
Two assholes. Okay, let's take Bernanke.
Bernanke or Elvira Sahibzadovna Nabiullina?
You're making me nervous. Oh, I see how it goes. Let's take Bernanke.
Bernanke or John Keynes?
Keynes.
Keynes or Karl Marx?
Keynes.
Sasha, capital or love?
Love.
Knowing your love for hockey, I can't help but ask, Washington Capitals or Viking Sport from Tallinn?
Listen, I have such an Ovi. They even brought me this Ovi. I love it. But my favorite hockey player is Alexei Kovalov.
If not for finance and the financial market, what would you do?
I know what I will do. I will have a shelter for homeless animals.
What do you think if Laima Alexandrovna was an investor? What company would she buy first?
Gunvar, everything that has to do with food, or she'd buy a Walmart.
Sasha, thank you for coming to us. We were glad to see you. I want to finish this podcast with the words of my professor of economics, who said at the end of each lecture, I wish you all success and sensual pleasure, more often, longer, more intense, and more diverse.
And I'll finish our podcast. Thank you for inviting me. It's nice to talk to you. We talk to each other anyway. But I'll finish with the words of my professor. When I was studying in Stockholm, he was chasing us, damn it, God bless you. And he said, well, guys, life is shit and then you die, which means life is a very bad thing and then you die.
Great. Let's finish with saying loudly the words FinFak to everyone. Thank you very much, friends. It was Alexander Kubоschkin.
Thank you. Bye-bye.
Alexandrov Vlad Alt3 Capital. See you soon. Bye-bye.